What's happening, guys? I hope you had another good weekend. We've got another Sunday scan here to prepare for the week ahead. First and foremost, Sean Boyers, I replied to you on the comment section, and so you're going to be receiving a IU t-shirt. And then this week we're going to do this center point shirt. As I said, they sent me a few more shirts to add to my collection. I've got a lot of different things. A towel. I've got a jacket, I've got a backpack, I've got a bunch of these different t-shirts, but I like this one. So anyway, we'll pick a winner for next week for this t-shirt. And like I said, all you got to do is just leave your biggest takeaway from scans like tonight, from the other night, etc. And the main reason for it is because I learn what you guys take out of these scans, and then it allows me to kind of think about where I want to go with the discussion that I talk about before my scan. So last Sunday, as I talked about, it was some of my hottest trading of my career. Each week, kind of scaling up, and scaling into those winners, and really compounding my gains, which was fantastic. But we had an outlier trade on Monday, and I ate it. So KRTX was obviously a nice runner. I tried it a couple times in the morning, and it obviously did not work. So I went ahead, started in, stop out, start in, stop out, and throughout the day, I started to kind of look to kind of position in for later on in the day, and ideally scale into that winner. And so, as I've talked about before, the pros of kind of dabbling in there is you start to get a good feel for what the trade entails and when to scale in. And I've done that numerous times with JD, like we went over, AMRN type trades, and things like that, where you kind of start in, you dabble, and you still keep that initial entry very, very minimal. But there are going to be times where it stays a lot stronger than you think. And it's not about, what you think anymore or where you think it should go. It's about risk management, stopping out, and, kind of moving on or waiting for the backside. So for me, I wasn't scaled into the trade. So I was kind of waiting for that either parabolic move or that squeeze out, the typical stuff move that we wait for, and it just never came. So it went up 2, came back 1, went up 2 more, came back 1, went up 3, came back 2, and each time that it kind of failed, it stuffed, slammed, and then it continued to hold trend. And sometimes we talk about it should have died. A particular name should have died, and there was probably 3 or 4 times that it should have died. But it continued to carry on. So it was a situation where I let that kind of feeler dabble position start to kind of add up. And at the point where I thought that it was potentially going to finally pull back, I started to scale in a little bit, and instead of it pulling back, it ends up swiping higher. So unfortunately, that's how I started my week out on Monday. And then for the rest of the week, it wasn't, I had a lot of good trades, but there was a lot of frustrations that went along with it. And I think it was 2 reasons. One, I didn't reset right away, meaning, I didn't just put that in the past and just, it is what it is. And I had been doing that in prior weeks. Anytime I had a decent sized loss relative to, how I was trading, it's whatever. Next day, good. Next day, good. Next day, good. And so I think I was a little bit slower to transition in that sense. And then the second thing was I'm a very patient trader. I try to get on the right side of the trade. I try to let the trades work for me. So then when we came to the market on Tuesday, we had MYOV, which was incredible. It was a great opportunity. And it was a lot like the momentum names that we have where you've got this one huge low float runner, and then all of a sudden the next day and the next day and the next day, everybody's just chasing everything. So typically the way that I kind of play those or kind of expect them to happen is everybody's kind of long biased on that second and third trade, because the first one comes by surprise, right? It traps everybody, everybody gets squeezed out. And then the second and third, everybody wants to be like the first, so they all stay long, 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 and try to let it work. And then when it does pull back, it's a disaster. So I was thinking that everybody's going to be long bias on that the MYOV, and it ended up being the case. It ended up being a nice pullback 16 to about 1050s or so, but I actually thought that it might continue to unwind. So I had scaled into the trade thinking that 15 was the top, and got a nice pullback, 14, 13, 12, and started to flush out, and went down to 1050s. And although I might have covered some, I was looking for the big picture trade. I was looking for the big unwind, because typically that news stock would be up a buck, but in this market they don't care. So with that said, it was a frustrating time because I overstayed on that winner, and then pretty much minimized my trade on that. And then the next day we had I forget what it was, a something, which ended up being a fantastic trade, again going $10 more than I would have ever expected. And same kind of situation as far as KRTX. I dabbled in on the front side a little bit, very small, about 1/5 of what I would use on the back side. Once the sellers came in, I started to scale. We got that $5 flush out, and it ended up working out perfectly. And so that's what I kind of had expected on MYOV. And I was patient. I was thinking it was going to go to single digits. Ended up going to about 950 at the end of the day. And that would have been fantastic, but I was too safe because of the way that MYOV treated me. So there was just a lot of second guessing this week. So long story short, it was kind of a very choppy week after Monday, and not exactly the way that I was looking for it to kind of happen. On Friday was really nice. MYOV, the goal was basically to kind of let it set up. So it had a huge move, pulled back, consolidated, and so the goal there the night before, so Thursday night on the scan that I sent out, was basically 1250s I want to see confirm. So it was bouncing around 1220s, 1230s, and I had started in, I added a little bit, probably had a little bit too much, so I went ahead and sold half. Then once 1250 started to confirm and started to break out, I went ahead and added to the winner. And so I was anticipating a potential 14 to 15 push. We got to about 1420s, where it pretty much hung around for most of the day. That was a nice trade. So finished the week off nice with that one. There was a couple other ones that, again, EYEG, and a few of the other ones. I think that was it, EYEG. Yeah, that was another one where, I in hindsight, looking back, kind of reviewing the trade, I should have done a lot better. I was up nicely. I bought the week open, or I bought the pre-market flush out where they kind of trapped, and ramped up nicely into the 9s, but I gave it too much patience in the above 9 area. And when I kind of reviewed the trade, which I suggest always to go back and see what you either could have done better or what you did wrong, there was probably 1, 2, 3, 4, 5, 6 different times where it tested the same level, and it got heavy, and it failed, and it stuffed. And the thing about that is every single time that it goes to test, you're getting more and more breakout buyers getting stuck at a high level. Stuck. High level, stuck, high level. So if it does not break, it's going to come down fast, and that's exactly what happened. So that was a little bit annoying to me, because I turned a really big win into, once again, minimized trade, as well as I missed a great opportunity because I was kind of biased, and because of that, I missed a big portion of the downside. So my goal this week is going to be focus. start with the A+ type setups, wait for the trades to come to me, and I'm not going to try to force any trades. We have a short week coming up. We've got Thanksgiving on Thursday, and then we've got a half day before. Typically, there's some crazy runners. We've obviously had crazy runners all month, the past 6 months. So I don't think there's going to be shortage of runners, but every time I get prepared for Thanksgiving week, I'm always disappointed. So I'm just going to see what happens. Hopefully we get some good action to trade, but if we don't, then I'll be patient for those setups to come to me. One other thing too, if you are interested in joining the community, joining Investors Underground, this week's going to have some really good opportunities, as well as some different deals than we've done before. As most of you guys know, we put out a post December 1st. Prices, we're raising them up a little bit just because we haven't changed prices since 2018, and all we've done is reinvest into the structure of the chat, customized a lot of different alerts, price alerts. We have different scanners, screeners, live streaming, morning broadcast, Traders Lounge, all these different features that we've added throughout the years, and at this point, it only makes sense. So, if you are interested, make sure that you check out what we send out this week. And if you have any questions, reach out. And obviously, we're more than willing to answer any questions. Let's get right into the scan. So, EYEG, like I said, the thing about this one is, if I had spent time looking left, like I always talk about, I mean, it's pretty clear. It was pretty obvious, and I probably could have done a lot better, but I fumbled on this one, and like I said, I minimized the trade, and it could have been better on the short side. I don't play the shoulda, coulda, woulda game, but it's an example of why I always look left, why I focus on what the daily chart can help us with, because when I don't, and I get too involved in the price action, the emotional side of things, then I end up fumbling the play. So nice opportunities. It did consolidate pretty well. I would say the key levels on Monday is going to be that 730 level. It was pretty much peaked out. They did do a little squeeze out late day, and so that doesn't necessarily mean that it's bullish. I think that typically would suggest that it's probably a little bit more bearish for the next day, because they've already squeezed out a bunch of shorts from Friday. Had it just closed weak, those shorts would have no reason to cover, right? And so in a case like this, where it did do the little rally into the close, all those people that were timid or emotionally attached, they've already basically covered into the end of the day move. But I will be watching if it starts to set up over 730s. That'll be a key level for me. But for now, I want to assume that 730s is going to be an area of inventory. And so in a situation like that, normally I'd be looking for potentially the backside, 730 stuffs versus maybe a 750 level. So we'll see what happens. A lot of volume on this thing, a lot of volume, a lot higher, so a lot of people are stuck. So that's going to be a problem. If it starts to run, it's going to be probably, slowed down or stopped by all these people that maybe average down and are trying to get out at 780s, 8s, 830s, things like that. So because there was so much inventory above, I would see that as bearish. However, just like MYOV and things like that, as consolidation happens, if there was too many shorts, there's always that chance that if it takes out the prior resistance, holds key levels, then you might have that short squeeze. But right now, I would assume 730s ramp, 750s as kind of the risk, and then look for the failed follow through momentum. SSI, this was an idea from Thursday, so this was a nice big earnings winner. And so it had a gap up, and about midday on Thursday, I basically had said, you know, I was buying dips for a swing trade. And I was thinking more, you know, like 3 weeks, 4 weeks, maybe a little bit like within the quarter, you know, let it ride out through the quarter. But it went way more than I thought. Basically 270s to, you know, I think 480s or so, 490s almost, into the close on Friday. So, you know, somebody probably took a position and then they probably squeezed a lot of shorts. There was a lot of big offers out there, and the bids didn't care. They were soaking anyway. So typically something like this, I mean, I'm done with the trade, but I'm hoping lower, hopefully low volume flush out, and then give some type of opportunity to kind of replace the shares lower. But the problem is usually I take it off and it just keeps on going, and I have to end up buying it back higher. But there was a newsletter that came into it at the end of the day, so I'm hopeful that there's a lot of retail crowd. Say it gaps down 10, 20 cents. They panic, flushes out 30 cents, and then I'm interested. But it's not a day trade for me. I mean, I should have treated it as one because of you know, the way that it ended up trading, but you know, you can't really anticipate that ahead of time. Macy's. So I usually watch this with retail as kind of your retail base, just like we watch SPY with the market, just like we watch USO for oil, or a bunch of the other, you know, names, UGAZ for natural gas, and DGAZ among nugget for gold, etc. So I use this kind of as that, you know, where's retail today? And if Macy's is having a big day, then I start to look at other retail type names. You know, maybe Finish Line's going up, maybe Dick's Sporting Goods going up, maybe all these other, you know, retail that have been beat end up, you know, having nice breakout days if Macy's is up quite a bit. So this one obviously flushed out, and then it came back, consolidated nicely. So basically what I look for is, you know, kind of where it was basing and where the prior resistance was and where the new base is. So ideally it comes back and kind of retests towards this 1520 level, 1530 level. That gives me a starting point to kind of risk based off of this prior VWAP line, weak open, ramp, red to green. Similar to MYOV on Friday. This easily could keep on going. A lot of times we've seen lately gap downs and then just all the way back up. And I'll show you, if you guys saw Weight Watchers, it's been on an incredible run, but they did their earnings. It gapped down huge, so it closed at 37, and the next day it's 30 bucks. It's down $7 a share. All of a sudden, straight up, all the way up to about 43. So just because there's a gap down on earnings does not necessarily mean that, you know, it can't keep on going. That's just the market. They're in control. You know, they create the appearance of weakness, or it's bad. You know, their earnings were bad, so it's down. All of a sudden, you look back, it's up, you know, $13 higher. So that WW is an example, as, you know, although M, you know, did gap down, and although it does look kind of choppy, we have been pretty beat. So if we start to, you know, all week open start to get bought up, we could go back and fill that gap, and then, you know, potentially have a long-term trend reversal over the 17s. But that's kind of getting ahead of myself for this week. It's just all I'm doing is trying to suggest that that's possible, and it's worth watching if it has those wicks that we talk about, where, you know, week open gets bought up, week open gets bought up, and so on and so forth. All right, so with that said, PDD, very clean, steady grind on Friday. All the washouts were soaked right back up. I mean, low volume too. You know, it came in steady, and then it started kind of pull back, and then, you know, it skips right back up on low volume up to the highs. It busts through the highs on some volume, but even here it pulls back and breaks out again. So the key level for me, looking left, if you guys remember on Wednesday, I had this trade, nice rejection off the 35, and then it couldn't find a bid. It just continually failed follow through, failed follow through, failed follow through. So basically, I'd be looking for that level to kind of retest and potentially act as resistance. I think it's going to want to consolidate around that range for a little while. So if trend's holding, I'd be watching dips to get long for that 35 test. If we open big, which is always a possibility, a lot of Chinese stocks love to gap up or down based on whatever happens overnight. But a lot of times you'll wake up and it'll be 50 cents, 70 cents higher. JD, Momo, PDD, YNDX, all those types of names. So they're always difficult trades because they just have such range and they just pick one way and go, then pick the other way and go that way. But with that said, I would kind of be basing a trade off of that 35, anticipating the potential of that it wants to squeeze out through that. Or if it gaps up and rushes through it, I would expect that it would want to come back and test it. So I'll be using that as sort of a guide and see what happens there. LK has been really nice. Josh in the room's been doing fairly well with it. If he's off on it, it's a minimal loss, minimal risk. But when he's on, it's it's going 50 cents, $1, $2. So it's been a nice grinder. I think the key here is to not look at the chart and say it's ran too much. It's obviously getting squeezed out. It's had a big move, but it's very possible that we see this thing slowly go to 32, 33, 35, something like that. So I would be cautious getting too much of a bias too soon. A lot of times you look at it and you're like, oh, this ran too much. I'm going to short every breakout, every pop. But a lot of times it breaks out, consolidates, and then breaks out again, consolidates. And as soon as it looks like a breakout, they sell into it and fades off. So they're kind of toying with the breakout buyers. They're toying with the weakness short sellers. And that's kind of why it's here at the moment. If you go back and look at the intraday charts and stuff, it kind of is toying both sides. So ASLN. Oh, okay. So tomorrow, basically, week opens, consolidate. Look for it to maybe retest towards this 29.60, 29.80 level, and then rally back. Potential 30 to 32 range. Otherwise, if it were to gap up and rush through 30.50s, I'd be looking as a potential pullback. ASLN was obviously a nice one on Friday if you got long and you happen to get stuck in all the circuit halts and you sold before the downward circuit halts. These are very difficult, and even if you rode it all the way up, I don't know that I would congratulate you just because the risk is so great. Because at any point in time, those downside halts, it could give back the entire move. So it just depends on what the supply and demand is, and when they open that circuit halt, if it's going higher, could go into the next one and the next one and the next one. But at some point, there's going to be that trend change, and as soon as that cover comes in and there's nobody left to bid, they're not going to bid for it at 220, 250, whatever. It could open at 170, 150, 90 cents, whatever. So just be cautious with these, and always, anytime something comes up from under $1 and starts to play around with the circuits, just be very, very cautious getting on the wrong side too early. Mostly cautious on the short side, because we've seen this, BNGO and a few others, where it goes from 1 to 2 to 3 to 4. And even if you had a small position at $1.50 or $2, that 3,000 shares could turn into a $9,000 loss very easily without your control. But as I had said in the scan, as you'll see, there's know what you own on this one. I did a blog post about that, knowing what you own, APDN, how they raised, etc. Same thing with VIVE, VIVE, on Friday. I told the room, know what you own. There's going to be times that you're too cautious, right? And they didn't raise intraday, they didn't raise overnight. It ended up being a really nice breakout. Yeah, absolutely. But the times that they do, this is why it's good to know what you're up against, and it's good to know what you own. And so that was the point of that blog post. If you guys had checked it out, if not, go to the blog page. But the writing was on the wall, number one. Number two, the price action was suggestive of it. And I'm not necessarily suggesting that you should have been short. This was a no-brainer. This was easy. I mean, in hindsight, looking at it, yeah, sure, it was easy. But what I am suggesting is that you 100% should not be long. One, because they can raise, and two, when the price action suggests that we're not going anywhere but down. It doesn't matter if it can rebound. It doesn't matter if it can squeeze. The key is to not get in a situation like this where you're in at 250 and then all of a sudden it's 90 cents. No matter what, even if you have a small size, you're going to crush your account in half. So same thing with ASLN. Be aware. You know, BNGO had a similar situation. They ended up raising in the morning. So as long as they don't do it intraday, that's fine. But you need to be aware of it. So that way, if you're trading 5 or 10,000 shares and you're not okay with a $5,000, $6,000, $7,000 loss, then you should probably recheck that dial, check in with yourself whether or not the risk is worth the potential reward in the event that it squeezed. That's the whole point here. COVS, very steady throughout the day. All dips pretty much absorbed. This chart is really starting to, take some serious steps up. It's been pretty steady. You can see it's pretty much holding a steady line. I'm sure if you just drew a line right there, you can see that they're pretty much supporting a key line. Higher the better. Ideally, it gaps up. Ideally, we get over 9. Ideally, we have some type of blow-off move. But when and if it does unwind, I'd like to be patient with it. But if it flushes out and it's a fast move, I want to be there covering. I don't think that it's going to be the one that just unwinds $2, in one day by being patient with a fast slam. If it's a fast slam, I'm covering more. Because I think it's just going to flush people out and then probably, get that bid back. If it's a slow, steady unwind, then I'd be a little bit more confident in letting the trade work throughout the day. MYOV was fantastic on Friday. The goal was, as I explained at the start of the day, was to kind of get long the week open. 1250 was the confirmation level for me. And the reason for that, kind of see that 1250 right over here. You can kind of see that it was a prior top over here from the day before, and it had a little bit of trouble. And then again the next day, which was the Friday, it ramped through it. But it doesn't, just because it ramps through it, and I try to make this point a lot in the room, but just because I want a certain trigger to hit, that does not mean we're going higher. Think about all the times that it might hit that level and reject. So the key for me to really scale is to let that key level break, kind of come back, retest, break back up, and confirm that it's going to hold that new level before I start to scale up. I want to see it base at this new level. So basically come through and start to hold over it and break higher. And at that point, I can start risking off this level. And so that's exactly what I did. Worked out really, really well. You can see that it consolidated throughout most of the day. And if you kind of take an outside perspective now, not being biased, not being in the trade from Friday, you can see they pretty much supported it. And you can probably draw some lines on here, which I don't, but you can see that this thing could probably set up for another nice breakout. Now, I don't want to get too biased on this thing. So, I was pretty confident in the trade on Friday, but I was also hopeful for a little bit more. I thought I was going to curl up and squeeze over that 1420s, but they were pretty adamant about holding that level down. So it did rip through, and typically the trade that I posted, typically I would have sold some into this ramp, but I was at 1470s, 1450s, 1520s, just in case it swiped up. It didn't, and I think it hit 1440 or so. So I was almost taken, but I didn't want to chase it down and sell it. And so with that said, there was definitely a buyer there, but you got to be cautious with this thing. If you buy the breakout, in my opinion, you're going to be buying probably right before it flushes. I think it's going to be I'm cautiously optimistic for the potential breakout if the new base becomes that 1420 level. So 1420, 1450 to 15 is the next key levels for me. And as I noted in Scan and as I noted last week, in my opinion, somebody took a position. Whether we see a 13 D, G, whatever it is, in the near term, I don't know. I think they need to file probably by tomorrow or so, depending on what kind of stake they took. But unless it was just literally a liquidity short long battle all day, and it had the 70 million shares. But it reminded me of a day when Icon came in and scooped up HTZ, and it was this day right here. It had 107 million shares, and it doesn't necessarily mean that it's going higher, but that next day we got a stake, or actually maybe the same day, he had filed a stake in it, and I was kind of blown away by the amount of volume that was created in order to get that position. So, just like MYOV, 72 million shares on something that normally trades, 5 or 10,000 shares is crazy. But when you think about it, somebody can acquire a very large position with that kind of volume. JMIA, I liked how this one kind of rallied. I like how it's a slow, steady grind. I would be watching for this exact setup. So let it flush under VWAP, let it kind of curl up, ABCD over the VWAP level, and then continue on. I think we're going to learn a lot right off the gate Monday, Tuesday, based on how it reacts at 6. If it fails, if it has trouble at 6, then we're probably going to unwind. If we start to do, week open, ramp, closes well, week open, ramp, closes over 6, week open, ramp, closes over 620, 630, then we have a potential here for, a nice little bottom reversal, because this thing has literally been straight down since IPO. So we'll see what happens with that. Definitely a nice one to watch. DTIL. This one was amazing. This was a Michelle idea. Michelle does our swing trade room. She also runs tradeonthefly.com. So those of you that are in IU have access to her chat room, but she also does a ledger and many other things, and she's been pretty hot fire this year. She's been killing it. So she always has great eyes, and anytime that she sends me a chart that kind of, just like in the room, I know what people are looking for. I know Paso likes beat charts that are starting to reverse, like JMIA. I know Josh likes LK type breakouts. I start to learn different traders and what they're looking for. And likewise with her, if I ever see a chart that I know she's going to like, I send it to her and vice versa. So she had sent me this one at 7. She had put it as an idea on her ledger for the long, and I mean, here we are, almost at a double. The other one was FULC, another great idea from her. So keep an eye on her. She always has some really great eyes. PRVB. This one I saw late day Friday. I actually did get a position and kind of sold it relatively quickly, just because I kind of was chasing the entry, but we were running out of time. We only had a half hour left in the day, so I want to watch a week open, potential breakout there. ZYME. This one's relatively thin type of trader, but it's been on an insane move from 24 to about 42. So we got about 20 bucks a share. I want to be patient, but I want to stay familiar with this, because when and if it does pull back, if it has that gap up day where it's up $2-3 bucks and it pulls back $2-3 bucks, we could have a nice, $3 and then another $3 unwind. It could be a nice, $4, $5, $6 trade. NH was an idea that I put on Twitter. TradeHawk had I think it was orphan designation or something like that. The first day, it kind of ramped up and consolidated. Once they broke that seller, I think it was about 85. It was like 3 days in a row where they peaked at 85. Once they broke that seller, there was a constant bidder, and it's been pretty nice since. So that was an idea that I put out there. So far, it's been working well. We'll see what happens, but nice idea so far. SPCE, absolutely getting smashed, and you know it's been nice off the mornings every single day, but it did have that flush out, started to consolidate. So basically, you know, if it has a morning shove and it fails again, I'd love to fade it, but the fact that it kind of flushed out, started to kind of base and gear, I would be looking for another flush, retest Friday lows, and then look for that rally. And you know, to give you an example of what I'd like to see, that would be on I over here, where you know, maybe it takes 2 times, maybe it takes 2 tries, but we had a nice flush out, comes back, consolidates, and then starts to, you know, break out throughout the day. So that's what I'd be looking for on SPCE. Again, who knows if we get it. For now, you should assume that it's just going to continue to unwind, but ideally, flushes out, give us an opportunity to get long, and then scale into the winner if and when we have some type of setup like this, where maybe I scale into the flush, it starts to consolidate and grind, and then I'd add into the winner. Just a couple more. Again, like I say every single week, I'm not looking to trade every single one of these. I'm trying to hit different points, you know, some higher price stocks for some people, some lower price, and then some bigger picture ideas. Uber, I could still see this breaking out, maybe 31, 32, something like that. Staying familiar with it. I like the chart. I like the opportunity. I think that we have a potential play. And that's why I want to keep it on radar. Not necessarily tomorrow morning, but I think we're going to have a $1, $2 type move. Whether it's upside or downside, I don't know yet. We have to see. But I know that it's coming. I like the volume, 50 million shares a day. There's opportunity. It's no different than when we were looking at CGC. You know, it's not necessarily I put it on scan I think last Sunday, and then the next day I had suggested, you know, potentially if it flushes out on the open, I think we could have a decent rally and do that gap fill, the same thing that we talked about on Macy's. Now, that's exactly what happened. But the reason that it was, you know, that I was prepared for it is because I had scanned it in the prior days, and I knew that there was going to be a trade close. It was starting to get too much too soon, you know, as far as the unwind, and at some point we're going to have that rally. And there's no point trying to find the bottom, but you know, once it does come in, don't underestimate it. So the last two was Kern from Friday. This one, you know, ran to 80. This was when I was in New York City. I think it was the Benzinga conference, and they were supporting us, Traders for a Cause. And it was that day, and it was like $90 after hours, and then it started to come in the next day. I was speaking this day, and I was short pre-market, and I covered because, you know, I was not going to be short a stock that was $5 the day before, and then $80, and then go up on stage. So ended up coming in the entire day. This is the first run since we finally had some volume. I would assume that it's going to fail, but I would not underestimate it if it does not. So hopefully we get a lot of shorts in there. Hopefully this churns and becomes, you know, a potential Thanksgiving crack play. But if not, don't overstay. Don't force the trade. And with that said, we also have a potential with PECK. PECK had, I just don't want to misspeak, they had a PR, I think, on Friday. I think it was at the close or after the close. But basically, they reclassified certain items and simplified their third quarter 2019 financial statements. And you know, they already had reported this, but they just basically put out this update on Friday after the bell. So, not that that's a reason for it to run, but this ran around the same time after Kern. It was just like SPCE, Kern. If you guys remember Hunt, they were all special acquisition corps, and special purpose acquisition corps, and then they become the new company or whatever. So that's the only reason I want to keep an eye on it. No volume, no nothing. But I just, whenever things start to run, just like if BIMI ramped, say it goes to 450 tomorrow or 5. You guys should be able to fire off a couple names, or at least one major one that you would watch in the event that that happened. And I would hope that SES would come to mind, right? So that's the way that my mind works is, you know, what ran at the same time and where would people be going to look for the next play. Just like when you're trading CGC, everybody's like, all right, what else is there? There's ACB, there's CRON. So it's all the sympathy trades either in the sector or ones that have ran at the same time in the past. So anyway, that is it for tomorrow. Again, the main watches are probably the ones at the start of scan. And that's about it for me. So again, leave a comment, your biggest takeaway from scan. And then we're going to give away this shirt for next Sunday. And if you have any questions, reach out. And hopefully you guys have a good rest of the weekend.